Hey there, it's Melissa with Atlas CFO. Today we are talking about the percentage of completion method. Now this is such an exciting topic. I know that you are ready to dive into this, so let's get started. Now we're going to be focusing on the percentage of completion method for construction contractors because if you followed our channel, that's what you know we love to do. So when we start with the percentage of completion method, there's usually a lot of questions on tax versus GAAP. Like, why do I need to do this? My tax basis is cash. So let me just dive into this just a little bit. The tax basis and the book basis, also known as GAAP, accrual, percentage of completion, goes by a lot of names. But those are two different methods of accounting, and you can have two different methods. They're perfectly acceptable. In fact, it's proper. So your tax basis could be on the cash basis, but whenever you get into financial statement preparation for, let's say, a surety, a bond manager, maybe even the bank, they ask that the financials are done on the percentage of completion method. That percentage of completion method is also known as all of these other versions, this book version, the GAAP version, the accrual method. And the way you get there is through a work in progress job schedule. So if you're a construction contractor and you are asked for percentage of completion financial statements, the tool is the work in progress schedule that gets you to that method of accounting. So why do we even care? Seems like a lot of work, right? Well, in our world of construction, we don't always have this beautiful lineup of costs and billings. In fact, we can have a whole bunch of costs and no billings, or if we're lucky, the other way where we can have billings, but we haven't incurred the cost yet. Additionally, because of the way we need to do percent complete financial statements, we have to recognize that so that we can get to GAAP financials. All of this really wraps up into a timing difference. And whenever we have a timing difference between our costs and our billings, we have to have some way to reconcile it. So this method, this percentage of completion method, gives us the ability to then take our financials and get them all the way matched out so that we can produce GAAP financials. There are three basic methods of determining a percent complete: cost to cost, a quantity-based, or some sort of a timeline. Cost to cost is by far the most common. I would say that probably 99% of our contractors use cost to cost method, but I'll go ahead and explain all three just so you have an understanding. So cost to cost is determined on the cost you have incurred to date, so cutoff is important. So cost as of a certain date divided by the total estimated cost. So let's just say you have a job and it's going to ultimately, at the very end of the job, have $100,000 in cost. As of your cutoff date or your financial statement date, you've incurred $50,000. That means you're 50% complete, right? That's easy. So the percentage of completion method would take 50% times your contract value, or what your total billings will ultimately be, and then you are able to convert. So now that you understand the basic concept, you can apply different methodology. However, most people do use cost to cost. If you do want to use a quantity, you could look at a square foot, square miles, some other version of the same basic idea, and you're going to take the miles complete divided by the total miles that will ultimately be complete. You can see from the screen, rest of it makes sense. On our timeline, you could also be doing a project over a certain timeline. Let's say that your project is going to take 12 months. You're under contract for 12 months. You've completed 6 months of those contracts, so you'd be 50% complete. Same ideas over and over. You're just using a different method of calculation for your percentage of completion. That's all good, and now that we've got the methods, but you want to see it in real life, that's when you really get everything to pull together, like, got it, okay. What you have in front of you is two versions of the same job. On the top section, we have the version that doesn't have a percent complete adjustment, otherwise known as a WIP adjustment, otherwise known as an under/over billing adjustment. It can go by many names, but this is just the way the job just flows. So first we have cost, the next month we have some billing and the rest of the cost, and in the final month we have the rest of our billing. Do you see that jagged? Woo, oh no, the first month we don't look so good. We have a pretty big loss that month. Well, not really. It's just that the timing didn't work out. So look at the bottom section now. The bottom section is showing what happens whenever you do have a percent complete adjustment. See how nice and smooth gross profit is? Ah, that's better. That makes it seem like we're not all over the board. We're just producing consistent financial performance. This WIP schedule is the tool that you use for construction contractors to get from whatever is currently happening in your financial statements to percentage of completion. Now, the WIP schedule goes by many names. It can be called the job schedule, a contract report, a work in progress, work in process. It could just be called the job schedule or contract list. Whatever it is, it all does the same thing. And whenever you get asked for it, many times people think that they just want a list of jobs. Well, it's actually a list of jobs that has this calculation on it. And in order to do the calculation, you actually have to go through the process of doing the percentage of completion, multiplying it times the contract, and then an adjustment at the end to make sure that you get your financial statements updated for all the timing difference. The WIP schedule isn't just a schedule that gets you to revenue recognition. It is my favorite. It's my favorite schedule for construction contractors. It tells you so much. So not only do you get to recognize the difference on your matching principle and your timing, but I often joke it's the one report to rule them all. There is so much you can learn from a single WIP schedule. So you use that WIP schedule to get you to percent complete, but you also get to see cash flow and future indicators and even some backlog information. Not only all of those benefits, but you also create financial performance consistency so you don't have those ups and downs, just like we saw on our screen whenever we had a job with the percent complete adjustment and a job without it. So what could you do? If you're interested and this is something you'd like to learn about, I know that it was hard for me when I first learned how to do a WIP schedule. So we created a class just on getting the WIP schedule complete, understanding how it works, and then how to get that adjustment on your financial statements. If that's something that would help you, you can check out the show notes here in the YouTube channel, or you can also go to our website and search up the WIP class. Thanks for spending time with me today. I always enjoy our time together, and I hope to talk to you soon. Bye.